Stavros Tousios for M4Markets. Today we're going to have a look at gold and also Dow Jones. If you recall, gold has been, of course, moving higher, and we talked last time about the potential of this sort of symmetrical consolidation turning into an actual triangle, which means that we could have actually finished the triangle, which then implies that we might be due another leg to the upside. Now, if we take into account that this is potentially an ended move, an ended triangle, 2075 comes on to the game plan here, but also the measured move, which is the distance between of the opening triangle. It's the 100%. That brings us actually just like to 2010, but as well as if we consider the end of the triangle potentially here, also 26 comes into the game plan as well. So either way, another move to the upside above the previous high, and then we're looking at around the 2070 area, if I remember correct, right? Now, of course, this is just based on the idea that this is a 5-wave move, okay? And this triangle has ended because triangles have 5 waves, and we have A, B, C, D, and E over here. This is 5 waves. So that also moved to the upside. So far looks impulsive. And this short correction so far looks corrective, which it's the ideal setup for further continuation to the upside, okay? Now, if we do lose the 50% though, okay, and we are close to the 38 now, if we lose the 50%, things are going to start getting a little bit more uncertain, because this and this, for example, yes, indeed, might be the first and the second wave, but might be the third, and that might be the fourth, and then we might see one leg to the downside for the 5th wave down, right? And then we'll go up. If we look at the Dow Jones, we talked about this bounce maybe a week or two ago at the 50% and at the bottom of this lower end of the descending channel. And we talked about aiming for 33K, if I'm not mistaken. We were down here then, if I remember correct. We are above 33K, we are above the 50, we're above the 61.8, okay? And of course, if we look at this particular Fibonacci retracement, the next level to the upside is around the 33, 87, 88, let's call it even 34K, because it's a highly active level over here, as you can see, as well as the 79 Fibonacci retracement. Now, if we are going to go all the way up there though, it will be unlikely that we're going to not come closer to this channel top. I'm not saying tag it, I'm not saying break it, I'm saying come as close as possible, because this is typically the first attempt. Come as close as possible, but maybe correct and then continue higher, or maybe we're going to come and top it and then come lower, and then we decide whether we go up or down, or maybe there is the unlikely chance as well that we're going to break straight through it, okay? And we're going to go for the previous high at 34.54 or so, then remain above that channel, and then of course the next level up in the medium term, now that I'm talking, is going to be the 35 handle. If we go a little bit lower, as you can see, we see no evident signals of a slowdown now, just a tiny bit of a slowdown on the RSI in the 1 hour over here, which of course suggests that a downside, okay, could be seen, but not necessarily a reversal. If we manage to stay outside this channel top, it means that the trend remains accelerated to the upside, okay? If we break back within, we are still in an upside trend, however, not as, accelerated. So we'll be looking for 33.15 and 32.82. I don't think we're going to get down to 32.59 before we go up. As the corrective leg. If we go up first and then down, that might be a bit more possible, but going straight down here, I'm going to tell you, and of course breaking below the 32.75 over here is going to increase the chances of seeing an actual reversal.